9/8/2013, 9:11 a.m. Pacific Standard Time. It's on a Sunday. The VIX, the Volatility S&P 500 Index. When we had every correction that we called for, when these rallies up, you can buy calls. We bought calls here. You can also buy puts when they go down. They're tradable. In the month of August, we hit a bottom down here on a weekly level, and we had a nice pullback in the markets that were long overdue again, and there is more selling to come. One thing I'm going to show here on this weekly chart is it had resistance here at the 100-week moving average. The thing of it is that we're going to pull back in here as this goes higher. The S&P 500, the SPX.X. Let's show it in here. SPX.X. This is the S&P 500. It got its bottom when we rallied up the first week of September, which is now behind us. We had this weekly rally. 1670 is going to be the major resistance level here. And on the fear indicator that we're talking about, we're going to get that lower support level right here on the weekly level. Is going to be the 20-week and the 50-week. And as we climb higher, then the September markets will go lower. So we're going to see how we pull back, what this upcoming week is about. If we continue to move higher here, we're going to be aggressively short in some of the leadership stocks in the S&P 500. There are various ETF models that we can use around the S&P 500, but this fear indicator is setting up a weekly base. It's not down here. Yeah, it came down and it's testing. It's going to test its support level here. When this rises, markets go down. That's the end of the story. And you have to know what side of the market to be on. In this case, when this rises, you want to be net short, and there is a lot more selling to continue in the month of September. Volatility throughout the calendar month of September and can lead into the month of October. So we're going to see how this sets up a consolidation base on a weekly level. This is what the fear indicator looks like on a daily. We rallied up good. And when we rallied up good here, market sold off in the month of August. We got to that high right here and we have pulled back, and we're going to set up a new consolidation. It gapped up here. It's going to pull it back. These are the daily simple movement averages that are going to be the wall of support. And at the wall of support for the fear indicator, you're going to have the wall of resistance on the S&P 500. And that wall of resistance on the S&P 500 on the weekly, again, I can't say it enough, 1670. Yeah, you could shoot up above it, but we are broke below the 20-week. That's the counter week. This is the month of August, straight down, and the bull counter rally in one of the historical worst months of the calendar year is September. All eyes at resistance here, and all eyes here at where the support levels will be. So when we hit support, that S&P 500 hits a wall of resistance. Then we take a look at trading the put options for 1650 put regular for October. And I can tell you that to set up a good rally, Christmas rally, Thanksgiving rally, this is going to have to go higher. The markets are going to go lower. We've got October earnings coming in. You got the debt ceiling. You got Syria. The market has a lot of stuff to digest. It's been very resilient. But let's just remember one thing. We set up the base here on this weekly moving average at support. That means that S&P 500 is going to be at its weekly resistance level. Once it reverses and this goes up. All eyes on both the S&P 500 and the fear indicator and how it works in the S&P Volatility Index.